They're not letting the train stop. That's what they're doing with all these programs. They're like, we cannot let this train stop because it'll be a bloodbath in the markets and real estate and everything, I think. So they don't want it to come to an end. And yes, I think you're right, David. I think they could try to hold it up and maybe delay it even further. Eventually, there's going to be a big market reset, and the momentum worldwide will be so big. One country is not going to stop it when everybody just tightens up and they're like, I don't know what to do. Like, I don't want to spend money. I don't want to expand. I don't want to do this or do that. And a lot of people will start to sell stuff. So, I mean, we just have to follow price. I think 2026 is going to be a very exciting year. The next cycle high is this coming year, 2026. And all the analysis that I've always shared with you, David, has been saying like something big is coming, something bad is coming. The thing is, we don't know when. The markets can drag things out much longer than you anticipate. The key is to make sure you've got a game plan. This cycle is saying we could have weakness at some point in 2026. Maybe it drags over to 2027. Maybe the markets still hold up next year with some QE. I'm not sure, but you need to be prepared.
Chris Vermeulen says 2026 is a critical market year. Warning, something big, something bad is coming, based on the Samuel Benner cycle that marked past market tops. He believes the Fed is delaying an inevitable downturn. He's bullish on gold and silver, especially silver, and bearish on Bitcoin, targeting $67,000, urging investors to follow price trends, not the Fed. Thanks for watching. Subscribe to Fine Metal for more updates.
In a nutshell, over the last three sessions alone, we had the Fed come out with a quarter basis rate cut, which shook the markets up. We saw some pretty good volume and volatility during that day. Then we had Oracle come out with not the most exciting news for the AI bubble. And then, of course, today we had Broadcom come out. And so the market I think it's a little exhausted, and it's had a couple of hits of bad news for the AI space. And so we're seeing that pull back. Now, if we look at the charts, there's a lot going on, which is kind of exciting. When we look at the charts, I think the key here, let's look at the daily chart of the QQQ on the right-hand side. Now, typically the market, it's had a very nice run up. The thing is, it hasn't had a pullback or a whole lot of a pause in terms of resetting the price. And what happens is when the price has a big run, it usually has to try and shake the market out before it goes higher. Now, we're starting to see that today. We got a nice big drop on the daily chart. So the news is catching up. Finally, we're starting to see everybody who's kind of moved in. Now the market is trying to scare them out and run them out. And if we look at the 30-minute chart on the left-hand side here, we get a really good view of all these layers that this market is going to want to break. And I was telling subscribers and followers the other day, this big run up underneath each of these little lows through here, there are going to be a set of traders with stops set. So as the market starts to pull back, it's going to start to run those stops. And we talked about the market coming all the way back down to this big gap here, that we're probably going to want to see this market come down, trigger all of these stops. So short-term traders who are way too zoomed in, they panic out. And we're starting to see that today. We're getting into these green bars telling us the market is dropping very quickly. We're starting to see panic selling pick up. And this is typically what happens. Look what happens in the NASDAQ after we have an extended run up. You have a sharp drop that spooks the market up. We have a big move up, then it has another quick drop. Another big move up, another drop. So a sharp drop is how the market bucks you off it, right? In a bull market, the bull tries to buck you off. The precious metal space, gold has been on fire for a long time. It has been kind of, while silver traded sideways for a year, gold actually just kept moving higher. So gold has had a lot of attention. Enough momentum got into gold that people then eventually bled over into silver. A lot of times I find for major trends, gold moves first and then silver is a little delayed, but then silver will play catch up on the back end, which is what it's doing right now. And so what I think gold got the attention, it got the love, and then suddenly gold's having a pullback and a pause. But now everybody is on high alert that precious metals are a hot sector because we're seeing miners breaking out. We've got silver, platinum, and palladium. Everything is taking part, not just gold. And so I think the reason we see silver moving up is because of simply people want to make more money. Silver moves faster. They're like, okay, well, if precious metals are going higher, give me the fastest moving one you got. Silver happens to be it. Silver also happens to be a much smaller market, I think, than gold. So it doesn't take a whole lot of more money to go into that space to make it go even higher. And so silver is just getting juiced right here because money's moving into it and saying, you know what, forget slow gold right now. I'm going to go into silver. And so silver is getting the attention. And it's, today, I think you and I are speaking, it's down about 4% alone.
Yeah.
But that's typical for silver in this type of environment. We got big up days, up 4 or 5%. Other days it'll be down 3 or 5%. That's just the nature of that beast because it's a tiny market. It moves fast, but it's the favored one right now. People always gravitate to where can you get the most leverage, make the most money. Silver's always been that. That's why there's silver stackers dedicated. They're like silver's going to go to 100 or $500, and that's what people are stacking for is when the system breaks and silver goes ballistic. And so yeah, silver just becomes that play later in the stages. That to me is telling me we're getting closer to a major top in the precious metal space. I still think there's another 40, 50% or more for silver to the upside, but it's telling me now people have shifted from boring gold to be more secure. Now they're willing to put on more risk. You and I have covered this before, the comparison chart of 2007. And if you take a look at the chart on the left here, the stock market was trading at all-time highs, gold was pushing to all-time highs. It's right where we are right now in real time. Similar type of setup. Both stocks and metals rallied together for the last couple of years. What I'm looking for eventually is the stock market to break down, and the money is going to come out of the stock market and it's going to shoot and get pushed into the precious metal space. So when we see this, David, when we see stocks crash and all that money comes out of stocks and people push it into the precious metal space, where gold could rally another 15 to 20% from here, silver could rally another 50 to 60% from here. Same with platinum, same with palladium. That to me is going to be like, okay, now it is like this feels like the end. The music has stopped for the stock market. And eventually the stock market will put in some type of pause. And then when it breaks those lows, that's when we go into like a stage 4 decline and the bottom falls out and there's mass devastation for businesses and bankruptcies, and gold will pull back with that. So that's what I'm looking for is this extreme divergence where metals shoot higher, everybody loves it, and people start moving out of gold. That to me will be like one of the last indicators saying, hey, we only have a couple months left and we could be entering a big reset and a recession in the economy, global economy. I think it's going to be huge for precious metals. I think there's huge upside potential in the next month or two still for metals to go much higher. I also think the equities markets are going to go into some crazy turmoil. But if the Fed does juice things up, well, they might push the stock market higher with precious metals still for another year. We just don't know. And that's why it's better to follow trends than try to predict cycles or what the Fed is doing and stuff like that. Just follow price. So this is Samuel Benner. This is a guy in the 1800s. He was a farmer. He lost his shirt, financially, and he ended up doing a lot of research and found multiple cycles that come into play. Long story short, there's 3 levels and layers to this. This top layer is like maximum peaks. So for example, in 1999, there was a major cycle peak plus a minor cycle peak, which we led into the tech bubble. 2007 or 2008 financial crisis was a minor peak. And then we struggled with 2019. There was a double peak, which was COVID. There was another type of panic in the market that created a sell-off. We could see a weakness all the way down to 2032. So that's a long ways away. It's a long time to be losing money, having businesses downturn. But this is all an opportunity when the markets do correct, 2032, or when my analysis shows that the markets are turning and things are starting to strengthen. Man, if you can survive a market crash and a reset and you have your capital and you can invest it in ways that will make you wealthier so fast than anything else, you can just move into multiple things. So that's what this cycle plays into. It's a very big analysis. It's not always accurate. It hasn't nailed everything. It's just interesting because it falls in line with the most recent cycles that we've experienced as traders and investors. And the next one happens to be starting in 18 days from now, the year start right on. Yeah. So if we take a look at the charts, to me, well, first of all, the trend is clearly down. A series of lower highs, lower lows. It had a fairly significant topping phase through here. Then you could argue there's another kind of topping phase through here. So no matter how you call it, it's definitely put in a top and now it's in a downtrend. To me, this looks like it is begging to break to the downside. The trend is down, so most likely sellers are still selling. They're still scared. This is pointing to lower pricing. And if we took the most conservative price target on here using a Fibonacci extension here, we can just take the power of this sell-off, the strength of this bounce, and that's telling us where we should go, which is around 67,000 per Bitcoin, which is definitely going to spark some serious panic selling because we're going to break this low over here. If we break this low, there's going to be a ton of people saying they're going to jump ship because this is a significant support level. And then you could argue in the big picture, this is a giant, maybe head and shoulders pattern that we have to zoom way out on this chart. Because once we break this low and come down into here, it's going to have some big bounce. It naturally does. And then we're going to have this potentially neckline, which breaks down and, we could see much lower Bitcoin pricing. Right now, just though, to keep it really simple, if you want to get an idea of what to expect over the next month, I would say this move right here is very similar to this move right here or this move. Pretty much most sectors, we're seeing precious metals, energy, stocks, large cap, small cap, micro cap, everything is kind of selling off. So it's kind of just, there isn't a safe haven really today. I think if you were to, if a gun was to your head, what's the best play here? It's probably precious metals. I think it's, I always like gold because it's slower, it's more stable. I find it has more patterns that play out and it has a strong pattern. But I mean, yeah, as a pair trade, I definitely wouldn't bet against the market here. I do think this is just a sell-off. I think the play here is just to let this market stabilize. The trend is still holding up. So I think you just want to stick with this. This is just a one-day pullback. It doesn't mean you throw everything out, out the window, which so many people do. It doesn't take much to spook people.